Okay, good morning, traders, and welcome to FOMC Day. It is Wednesday, September 16th, and I'm Michael Boutros. Good to be here with you guys this morning. Hey, Jay, how's it going? We're looking for the FOMC interest rate decision, which is on tap today. No expectations for rate changes. Even the commentary, to be quite frank with you, is likely to be limited. And the rates, here's what we're looking at. Here was the last Fed interest rate projection. So the things we'll be wanting to look for, obviously, are the major variations that we're going to see right here in their forecast for GDP, employment, and inflation. Most importantly out of here, guys, negate this, right? Here's the projection from December, obviously pre-COVID, 3.5% on unemployment. Now at 9.3 was the last projection from June. We want to see where this looks, right? But the more important picture is going to be GDP growth, which last time they had a contraction of 6.5% for the year. And big one will be the core inflation. Remember, the Fed's primary mandate is price stability, which is i.e. inflation, and labor force participation or employment. The employment sector, that's going to be very determined on what's going on with the coronavirus, and they're going to put a lot of reliance on that. It's going to be more disconnected with Fed policy, in my humble opinion. The inflation picture is going to be the outlook here. And with no inflation seen on the horizon, even a 1% longer running, 2020 print here, we're basically expecting this to look exactly the same. Here's the interest rate dot plot from June. Again, essentially zero rates all the way through 2022. So by the way of new information today from the Fed, I don't really think we're going to get much. More so, it's going to be the commentary and if he's more bullish or bearish, and the growth prospects are really what everyone's going to be looking at, what the Fed sees as far as the impact on GDP heading to the close of the year. But with all those things said, prices are trading at some really great levels. So on the menu today, we'll hit DXY, Euro, and Dollar Yen, the three biggest movers typically on these data releases. Kiwi, want to hit peso real quick. We're at support there, downtrend support. So you might see a little bit of a bounce. Sterling came off support last night, and gold is just at September open resistance. Looks like it wants to make a probe higher. So any other questions or trade setups, as always, feel free to throw them on the message board. Again, bear with me. I'm still working with my left hand, so mouse movements may be a little sporadic. Here's the XY. The focus has been this rebound off of the 2018 yearly open, multi-year uptrend support from 2011. Okay, you had the 2016 low. All of those offered a nice buffer of support here, and we got that initial recovery early in the month. A little bit of an exhaustion pullback. The focus on this is, do we see downside exhaustion ahead of that slope? Obviously, ahead of 92.28 would need to be the case for there to be any hope for a larger recovery in the dollar. Resistance still 93.90s, okay? And really, we need a breakout of this slope to validate a large return in DXY. But the premise hasn't changed. Nothing's changed really since the start of the week. And we're heading into Fed with some pretty decent opening ranges. So here's DXY on the daily, okay? We talked about the divergence we were seeing last month. Here's the pop higher and break test of that trigger resistance as support. The move higher failing at basic channel resistance. We've been holding this for the last 5 days. So 92.48 ends up being the 618 of that rally. I preferably don't even get that low, but that's kind of an area we'd want to see downside exhaustion. Again, 92, that 20 zone, 2018 open, that's really our bullish inval still. Anything beyond that, you're looking at a bigger turn there. This level also now defines the low day reversal close that we made into the open of the month. The low day reversal close comes in at 92.31. The 2018 open comes in at 92.28. So key support there. Anything beyond that, you're looking for resumption, okay? And that basically threatens 91. Not our favorite scenario, but those are the cases heading into Fed. Intraday, it looks like this, okay? The weekly opening range is pretty tighty. It's Wednesday. Okay, here we go. It's Wednesday. Here's your weekly open, right? A little bit of a drop, pull back, test it. There's that same slope resistance, and here we are. The 50 of the advance is right here, 92.70. I had that just as a soft target. Again, don't want to see anything below 92.50s, 92.48 here if this is going to work. But downside exhaustion risk into this zone if dollar is heading higher. Remember, the whole picture is that we're coming off of longer term downtrend support and uptrend support. Big zone. Is that all it's going to give us? My preference is that no, you see a downside exhaustion and a little bit of a spurt higher here. Look to reassess once we get towards that 93.90 level. Just my humble opinion here on DXY. Any questions? All right, so that is number one. Quick run through on the DXY. Euro is very similar. Told you guys yesterday I was holding a short on this. I still am. A little bit of it got peeled off last night, but here's what it looked like. So the two levels that we were looking at were the weekly open support 118.30 and the 618 at 118.15. I had a quarter off here, still holding 3/4 of the trade. Had another quarter set to come off here. And then obviously 117.54 is kind of like the big zone. I don't even have a limit there because I think if you get down there, you'll probably see an accelerated drop, but that's the idea, the three zones of interest on the downside. At this point, it's a tight stop against the highs. If you want to be a little bit more, play a little bit more open to account for some of the volatility we may see today, maybe want to keep that stop against Friday's high, or Thursday's high rather, instead of this week's high. But it's the similar scenario. 1910, 1913 needs to hold if this is going to turn lower, right? Again, playing euro on the longer term picture, it's the very same scenario. DXY at support, euro dollar on the weekly at resistance, coming off of uptrend channel resistance and tagging again that same 2018 open at 120. So it's right here. I mean, we need to see some sort of reaction. I want to see topside exhaustion again if this pushes higher, but the move that we're looking for is a little bit of a tilt to the downside. That's the weekly. Here's the daily. All things held constant, monthly opening range remains intact. Here's your monthly open, slide lower, and we're still holding that range. Monthly open resistance, 119.36, okay? Anything beyond this zone, again, just like DXY, you're threatening resumption, guys, for the move higher. All right, you're looking for possible reaction at that slope, but the next lateral levels are into 121, 121.50, 121.45 here. So similar scenario. Look for topside exhaustion on a pump if we get that play rather on FOMC. Again, the intraday chart, 1913, 1910 is what I'm looking for if this is going to hold. I mean, obviously, ideally, we don't even get up there. It's going to stop us out if we do, but it's a tight stop. We've taken a quarter off. It's not a big deal. But at the end of the day, that's where you want to see any failure on the long side for euro. Questions? Okay. Well, moving on. Dollar yen. Big mover on U.S. economic data, specifically rates. Looks pretty darn good. We noted early in the week, guys. It's funny because it's dollar yen. We noted earlier in the week to be looking for a breakout of the range here that we've been trading in, specifically the monthly opening range this week. The consolidation has been rather tight for a couple of weeks, right? Below downtrend resistance. Here's dollar yen on the longer term charts. Here's the daily. And here's the break, guys, of the monthly opening range as we were looking for early on Monday. Here's your monthly open. That's your monthly low right there. Excuse me, into 105.50s. Nice consolidation, break to the downside. First level that we were looking for, the major breakdown zone is 105.20. We've broken that. All right. Keeps the focus lower while below 105.20. Initial upcoming targets right here at 104.80. It's going to be a 786 of the advance. And then 2019 low, nice pivot in price, right? That gives you 104.45. Levels to consider on the downside. Resistance at 105.20, looking lower below that. Bearish inval now drops to the monthly open. If you make it back through the monthly open, you're probably looking for a washout, or you're probably marking a washout, right, for these guys here on the short side. So that's the game plan. Downside targets, like I said, 104.80, 104.45. The big level, 104.12, would be a big level I'd be looking for, because that would be two equal legs on the post-March rally. So two equal legs off that high is going to be 104.12. So really nice levels on the downside. Granted, 105 holds as resistance. Here's what it looks like again on the intraday chart. So there's the consolidation, right? There's the downside break. Any recoveries you'd want to see fail, again, maybe a little bit higher, 105.30s, but you get the picture. You'd want to see fail along that parallel. This is a really good tell here. We broke below it, tested as resistance, and right back off. Keeps the focus lower below that slope. All right. Again, where we are in time, ahead of the Fed, not the time to jump into this. If you're not already holding it, there's nothing to do. Okay, you're looking for a possible recap, possible pullback here to fade again. If you're holding shorts, you're bringing down your stops at this point. Keep your eye on 104.80 and 104.45 as your next downside levels. Now, I don't want to clutter the chart too much, but one thing you can also consider on this is basic slope off that late August high. And if you take a look at something like this, and you take a parallel of that slope, look where the lower parallel converges. It's pretty interesting. Just to do these parallels oftentimes will highlight levels you're already marking as levels of significance from a technical standpoint. So here we go. There's 104.12 again. Look, it's the lower pair. It's the median line of the pitchfork that we're in blue. And now, just taking into account near-term price action off the high, you're looking at that slope converging there as well. Okay, so further highlighting just your conviction levels. Also, one other thing to note is look where the weekly open comes in. We just highlighted that as our near-term bearish inval. Well, that would necessitate a break of this slope, which again, further gives us a little bit more conviction on those levels. So things to consider here for dollar yen moving into the FOMC later today. Just on a side note, I'll be doing some live coverage for IG. I'm not sure where they podcast it, but you'll see it come up on DailyFX's Twitter handle. They just want some live reaction during the before and after the release. So I encourage you to find me there if you have time. That is dollar yen, number 3. All right, Kiwi, number 4. Look, this is at resistance, but on the breakout type of play, Kiwi and Aussie are the ones that are risking the bigger move here. This is at resistance right now. I showed you this level yesterday. It's defined by a confluence region of the 786 retracement from the decline off the highs of the month and the 100% extension of just the ascent off the lows. So fib confluence right there at slope resistance. Now this slope, again, it hasn't been in play that long, right? Here's your high from June 30th, your low from August, your high from September, median line support like a charm. This is the 75% line. Has been a pivot here. We were watching that earlier as well. Here's the upper parallel. If it's going to fail, this is the zone. Okay. Now, if it breaches higher, I would be very cautious on trying to chase any type of long exposure unless it closes above what? Well, that's simple. The high day close for the year at 67.70, 67.71 right here. So that's the risk for me. I'm looking for failure like right here in the ideal scenario world for it to turn lower. But if FOMC comes out and you get that push through, the last hope glimmer would be a failure like stretch here and then a breakdown. Anything beyond 67.70, and you're looking for straight up resumption. Man, there's nothing to like 68.90s on the long side. So I think we get some definitive price action here in Kiwi today. Looking at resistance at 67.50s, watch that zone. Watch for a pivot there. Watch for a reaction off that mark into FOMC. Here's Aussie. Similar scenario in that, you're kind of probing a resistance zone that we wanted to see hold here, right? We discounted this as a false break because we closed right below it and then we held it as resistance. Here we are flirting again with a topside move. Look, I opened it up last night on this 70-30-80, 73.80, 73.75. Even if you get a spike into that, I still could consider that corrective. 2 equal legs, 73.80 would converge on slope, then sort of a breakdown from there. Possible scenario. Again, I hate to give you guys these could, should, would, but these are the sort of the plays I'm looking to see if they execute here today. Listen, at the end of the day, Fed could be a complete flop. The markets might not do jack. The rate expectations aren't going to budge. It's really going to be on this description on where growth is moving forward, on whether that -6% clip whether that gets revised lower or higher. I guess the tone, they're going to run with whatever they want. Watch the headlines. You'll see every single reason under the sun that anything's moving. But at the end of the day, from a price standpoint, here's what we're looking at as possible zone for exhaustion on Aussie. On Aussie, I would want to see a break below the weekly open to validate the turn. Okay, so that's going to be 72.76 here. Right? That, in my mind, would give us at least a validated move for the turn lower that we were looking for in Aussie. Man, okay. That's what it looks like on the larger picture there. Questions on Oz? 72.76 is the break for the move lower. Key resistance 73.80. So that's Kiwi and Aussie. 4 and 5. Okay, quick look at peso. I don't know how many of you are actually involved in this trade, but it's been pretty clean. The focus was that we were coming off of downtrend support yesterday. And you could see a little bit of a bounce here. What I told you to look for was a focus on resistance in this zone. So if we recover off this slope, which we did recover a little bit higher even last night, the whole point of this is that it needs to hold 21, basically 21.3, this zone right here, if this is going to work and continue for the move lower. Remember, on the longer term picture, it was a pretty big break. Okay, so I'd want to see resistance hold there. Next downside level of significance is down at 2067. So one of those trades where, again, if you're in it, you're just bringing down your stops. You kind of want to watch for a hold here at 2130. This is going to work. Next downside levels, like I said, 2067 on peso. So the problem I have here is, for me personally, my focus is still actually on that recovery towards 2130. Because if we're going to see some dollar strength, if dollar is going to find some basing here on some of the majors, it might limit, at least near term, the downside move that you could see in peso. But I don't want to necessarily use that corollary justification. At the end of the day, you're coming off of downtrend support, right? You made some pretty radical divergence into it here. But is that the extent of the recovery? If you get a straight dollar breakdown today, sure. Yeah, break lower, look for that shot right down to 2067. But all things held constant, you'd want to see a little bit more back and forth, possible recovery, failure at 2930 if it's going to keep going. Questions on peso? All right, it's number 6. British pound off of downtrend support. Here's sterling from yesterday. So our last update on sterling was back on the 14th, and we had just opened the week with a nice recovery right off the same levels that we're talking about. Remember, the critical level that we talked about here in sterling, ever since the break below uptrend support right here, was 2754 into 27. Big zone of Fibonacci support, yearly open support, some high day closes up there, big zone. Now, we didn't actually get a very deep probe. The actual test of the low was 2797 instead of 27. Is that right? Yeah, 2797 instead of 2754. So we just turned ahead of it. But here's the recovery. Again, it's the same type of scenario, bigger drop, looking for the upside exhaustion on this stretch. Immediate focus is on a reaction at 130.37. So we warned about the recovery because we were coming off downtrend support. We said the short bias was at risk into this 2754 level. It's been pretty much a one-way trip, right? You got another opportunity to get in here with this pullback, stop against the lows for the move. 29.31 was a basic 236. Here's your August low at 29.79. The big level, again, that 30.37 level, 30.33. last Thursday's high. Okay, got a 38.2 retracement from the decline off the highs for September. And you got median line resistance. Note that the lower parallel, the reason this comes into focus is point in fact because the median line break offered acceleration, giving us some conviction on the slope, and the lower parallel was perfect support. Okay, again, a break through the 25% line fueled acceleration on the upside. Median line converges on that same confluence zone. All right, so really critical to see what your sterling does into this nestled region to 130.30 or just above. Possible area of exhaustion on the long side trade here. If we breach this on a closed basis, look, you probably see a lot more upside, but it's still within the confines of the pullback, right? So even if this thing rallies towards 32, you're not out of the downtrend yet. We broke big uptrend support here. So we're treating this as a near-term recovery. Even if we were to give us a three-wave advance, beyond 30.30, we'd still be looking for exhaustion. But the immediate focus is on what price does right here today. Any questions on sterling? You got core inflation numbers that came out today that were stronger than expected. We got a 0.9% clip. Forecast was 0.6, obviously all down from the previous reads. Inflation for Canada was a little bit weaker than expected. Retail sales here was a little bit weaker than expected as well. Quick round about some of that data. All right. So let's continue to watch here. Sterling is something. This is one of the ones I'm not involved in that I'm very interested in getting involved. I want to see what happens on this stretch here. Might push it out even till here. That's like open up Asia tonight. Let's see what happens. All right. So that is a quick look at British pound. Last but not least, damn, I ran through these today. Gold. Not many questions from you guys. Let me know if you have any other setups you want to take a look at. Here's gold, make or break today. Today. You are at resistance. You are at resistance. You are at resistance. Any way you slice it. Here's gold on the daily chart. Okay. I'm sorry. I should lubricate the bottom of this cast. It'll make it smoother. Here's when it goes. Monthly open resistance, real objective level, 1967. We're trading that right now. You also have basic slope off the highs from that mid high they made back in August. So one touch, two touch. There's the convergence. I counted yesterday as a third touch. So I'm using this slope right now as a near-term breakout. If you see a rally close back above 1967, I do have bearish inval 1994. That doesn't change, okay? But we're at resistance right now. So my point is, even if this were to break intraday for a strike up here and pull back, that's kind of the breakout zone. That's what would shift the focus of the resumptive trade for the broader uptrend. All things held constant, you're at resistance right here, right now. Okay, here's gold on the intraday charts. I mean, there's not really much we need to show you, but just to remind you again, here's gold on the weekly charts, right? All of the hoopla we've been doing the last couple of weeks, we're still in a very well-defined range below the 618 retracement. Again, that's 1994, and that's why that's maintained as our bearish inval. So, taking that longer-term objective view of price on the bigger picture kind of puts things into perspective here for us. So, here's the intraday chart. We've been working with this downside slope for a couple of days. It's been offering a decent hold, but here we are. Early in the week, we highlighted this zone as resistance. Watch this right here into this 786 retracement, or again, the monthly open resistance. We failed there, right, on Tuesday. Here we are again. Look for a reaction here today. If we buckle above 1994's level, breach there, close there would mark resumption. On the downside, weekly open support is where you get sort of your go for the downside in gold. All right, so some support right here at this slope, bearish or bullish inval. Big level, big level. I don't know if there's enough in this rate decision to trigger all these catalysts on some of these moves. But if it's going to happen, this is where to look for it. Keep in mind this too, guys. We're heading to the latter part of September, last couple of months of the quarter. Use caution here as we get um, towards more of those portfolio rebalancing moves that can sort of jack things up. All right, that's everything on my list. Pete, SPX and crude. So I haven't been looking at crude. SPX is kind of interesting. Here's what I showed you guys on Monday in the webinar on daily effects. It's very interesting that the broader, longer term picture, again, this hasn't been changed since before break. We talked about where we failed just ahead of a measured Fibonacci level at 3602. Slope resistance, uncanny, okay? Real close. Failure, downside slope support, again, just very basic. This is the slope origin of all of these parallels, guys. It was all off of these two lows. That's what we traded into this month. Pretty big, pretty big. So am I surprised to see some upside? No. Do I think we could get some more upside? Sure. Am I bullish from here? I think you'd have to break monthly open resistance. You're still bearish below 34.96 in my humble opinion. So if you get a rally towards monthly open, you look for a reaction there, exhaustion high. Is there more on this upswing? Well, based on the intraday, we just broke a near-term consolidation. So I think, again, the possibilities there. I'm not, involved in this, but if you had to put a gun to my head, we just broke out of that near-term multi-day consolidation. You could see a push stretch towards 34.77, but I don't really want to see much more strength beyond that. 34.77 again. The weekly or the monthly open is 34.96. So I have a nice little, let me highlight that both here. Both levels to look for. Possible top side exhaust if reached. If reached. Now, if I bring in the interiors here, 38.2, we're testing that right here. We broke through it. Next level would be the 50. That kind of lines up with this pivot I was looking at this morning. I don't want to be chasing fibs on a breakout. Okay, so just levels to consider. I'll leave that on you on there for you, Pete. But pretty big, coming off of big support. So definitely, the possibility for a little bit of an advance would be there. How deep does it get? Let me just see what this looks like. Bear with me for just a moment. Yeah, I'd work with that. I'd work with that. So I'm going to remove this on account of this being a break, right? You all see this near-term consolidation breakout. So working with just the near-term upslope here. Let me just get rid of these longer-term slopes to kind of add some color. Actually, no, I want to leave that. Initial resistance right here into the US Open. September Open, bearish inval. Right up there into that 90 region. Okay, now on the downside, you're basically looking for slope, but the January high is what I wanted to see. And that's what I was looking for here for a larger sort of accelerated move. And you could see as price got there, there was acceleration on both sides, both on the breakdown, quick recovery, failure, and then a pullback up, both times. So yeah, I want to see sort of a solid close below 337 to validate a larger sort of correctionary move in the SPX. Not the popular thing to say these days, but that's the risk. Pete, does that help for SPX? Crude, I haven't looked at in some time. Let's take a gander here. He says, great, thanks. Right on, Pete. Always a pleasure seeing the room, man. So I can tell you on face value, again, I'm looking at this for the first time since I got back from break. You basically just broke the monthly opening range, was kind of a drifter on the long side, but a really well-defined short side break. There's the move below the monthly objective open at 40.44. I'd basically be looking for resistance ahead of there if we got deeper move on this. I just wish that the, back and forth here gave us better slope. Let's see what we got. Oops. All right, bear with me. There's a lot of slope here from the longer term that I kind of carried over back when it was on the breakdown. So just let me see what this looks like real quick. High, low, high might be the way to go with this one. Yeah, I'd work with that. You can't really see it too well because of these other levels. So let me just clean this up for you. Okay, real nice ascending channel formation, break, retest of resistance. That's pretty clean. Objective high, low, high from the late July 21st high essentially gives you a pretty decent pitchfork. Um, Pete, I'd say that I'd be comfortable working with this. Couple of different reasons. Really nice pivot along 25% parallel, or the 75% rather, excuse me, break below instant resistance, Acceleration through the median line is what you want to see. A little bit of a low drifter there, but 25% parallel holding resistance, break of that parallel, accelerated rally. Here's the median line resistance. So on a setup like this, it's actually ends up being quite a typical setup with retracement. You look for the interior levels that converge on slope. Boy. So you broke the 38.2, which is right about here. And look where that 618 comes in. Not bad. So that's kind of your level of resistance, bearish inval. That's where I'd want to see hold. If we break through here, look, at the end of the day, you're at resistance right now, Pete, right here, right now. If this breaks, targeted move on a breakout would be 40.83. Okay. And the only reason you would actually expect to see a break here is if actually you see a dollar breakdown completely. This will tend to work inversely pretty decent with the dollar. And you can see over the last couple of days, even this pull higher in accordance with the dollar moving lower, right? So those are the scenarios you want to kind of keep an eye on. And one other thing, let me just see what this real near-term slope looks like. Did we pierce the long side? Oh, we're right there as well too. Okay, so that's another reason why, again, a breach, you'd expect the accelerated move. 39.90s would be a soft target. I really wouldn't even pay attention to that too much. It would be more towards that 40.83 level. All right, does that help? Support, obviously, look at that plane. Okay, on the downside, if you break anything beyond this, I mean, you just got to look for slope. It's all slope on the short side. So that, my friend, is what we're looking at with crude. Quite interesting. Ideally, let me just add this. Hold on. Let me amend this real quick. Let me get rid of that 50. Or at least make it lighter. That's the zone. That's the butter zone for crude. 40.44, 40.83 defined by the, again, objective monthly open resistance. Okay, we've obviously seen a pivot there on the way down. 618 retracement of the advance, of the decline rather, slope resistance all right up here. So in the scenario of a breakout from the immediate resistance we're trading at, that's the level to look for. Pete, does that make sense? He says, awesome as usual. Hope you're feeling better. Thanks so much, Pete. Yeah, I go tomorrow, which is why I had to rearrange the webinars this week, guys. Go in tomorrow to get an x-ray on this thing, get this cast off, and hopefully, I don't know if they have to put it back on, but hopefully they can mold it where I can fit a a mouse in there somehow. We'll find out. So wish me luck on that. And if there are no other questions, guys, let me know. If not, best of luck trading today. Look, watch for that Fed release as it pertains, again, to those specific data points that I noted out. People are going to run with, um, is this the right one? This is not the right one. This is September, excuse me. People are going to run with that CPI and GDP print ahead of all things. Okay, I lost the page, but let me get it for you one more time. Okay, here we are. Here's the June projections. A quick note where to find this. I'm going to put the link for you in the box here. There's the Federal Reserve link, guys. So when the release comes out, you're going to see the September fields fill here, not on the statement, but on the projections material. So here was the last one. You'll see this populate right after the release. Take a quick click on it and just take a quick look at what deviations we see specifically here and specifically here. I think that's what are going to be your major market movers. The employment picture is kind of a null statement at this point because it's more determined on, like I said, the state of the closures, state of the lockdown, where they are in the curve and all that nonsense. So you're not going to be able to really judge that. And in my opinion, the employment picture is kind of, at this point, doctored, right? You're forcing people to close down. It's not really a natural unemployment picture anyway, but those two things to look for. Best of luck trading today, guys, and I will see you on Monday on the Daily FX session. And I hope to get back to Tuesdays and Thursdays again next week, guys. I'll let you know how tomorrow goes. Cheers.